Hey guys, what's up? This is Francisco with Valerizo Capital, and on today's video we're gonna go through the market update. We're gonna take a look at the major indexes. We're gonna take a look at the price action. We're gonna try to understand what is price actually telling us so that we can create a trading plan for next week and for the couple of weeks that we have left for this month of November. We're also gonna take a look at some of the sentiment indicators that I watch, and then we're going to take a look at some of the possible resistance levels if we happen to continue to trade to the upside. Remember guys that this video is for informational purposes only and is not financial advice, since everything is just based on my personal opinion. And also guys, remember that since you're here in the channel, remember to like and subscribe, and also share this video so that more people can find this information and can use this information and as an asset for their trading business as well. Now, the first thing that I want to start off with is I want to start with the QQQs. I think that right now the Qs are one of the most important charts out there in the market, given the correlation that the QQQs specifically have with the kind of the tightening cycle that we have seen by the Fed. So I do want to pay a lot of attention with the Qs, because I think that if we're gonna see any meaningful bottom, we're gonna see any meaningful bottom specifically in the Qs. Given that if we happen to have a change in the cycle, given that the market already priced in all the rate hikes that we're gonna see in the future, the biggest winners are gonna come from the Qs. So that is what I'm seeing in my opinion, and I want to take a lot of emphasis in this chart. So first of all, I have this very important level here in the Qs, which is 282. Let me just grab my drawing tools here. There we go. This very important level is 282, or we can call it 280. And something very interesting that happened last week is that we actually held that level. So you can see right here, you can see this green line right here. That's actually a buy signal that I had active on the Qs, given the price action that we were seeing on the momentum oscillator, which is the trend oscillator right here, which is the indicator that I have on my charts. Whenever we get some meaningful move above the midline in this indicator, the midline being this 50 line right here, I get a buy signal. Why do I get a buy signal? I get a buy signal because there is more pressure in the buying than there is in the selling. So as soon as I got that buy signal, I always tend to shift my focus only to the long side on the indexes. So what happened here? Let's go through the price action that we have seen so far. First of all, we have a very strong gap to the upside, right? So you can see this kind of price action, same as you see the earnings gaps on any particular stock. So anytime you have some very strong news about a particular stock after earnings, you tend to see a gap to the upside. And when you see that gap to the upside, what happens is that there is new information in the market. So when there is new information for the market tends to start to price in that new information. So that's why we tend to get these very strong gaps to the upside, and these gaps to the upside tend to happen in a lot of volume. So that's exactly what happened in the Qs. So we had a very strong gap to the upside. And what happened during this last week, which is very important? First of all, this gap to the upside happened above that declining 10-week moving average, which is the purple moving average in my charts. That also correlates with the 50 daily moving average if you happen to have that moving average in your charts. As soon as we get this gap to the upside, what is the really interesting thing here is that we didn't give those gains back. And that's a real change in character for the indexes at this point, because what we tend to see in this bear market, what we happen to see a lot of times is that when we get these very strong moves to the upside, we instantly get rejected. We get these moves to the upside, then we get rejected. Move to the upside, we get rejected. And right now what's happening is that we actually got that gap to the upside, and we actually consolidated sideways. And we not only consolidated sideways, but we consolidated sideways above 280. So that's a very, very important level to understand in the Qs. So what happened is that we got that gap to the upside. We got a follow through to the upside, which is high, there was a high probability for that happening, since there was a lot of shorts in the market and those shorts got squeezed. So we got that move to the upside. But what happened? We were overbought. You can call this overbought, because there was a very considerable distance between price and that 50 hourly moving average. The 50 hourly moving average in my charts is this yellow moving average that you can see right here. So what happened? Price gapped above the 10-week moving average. Then we consolidated sideways. And what happened last week is that we actually retested the rising 50 hourly moving average. So we were overbought, and now we're not overbought, and we actually tested support. So that's actually something really important to understand here, that price action actually retested that level, and price action is actually holding that level. So when price action is holding that level, I just want to participate on this chart to the long side. Why? Because we have really clean levels to play with, to participate with. Why do I mean by that? If we happen to lose this rising 21 exponential, then we're going to be looking to the downside. But if we happen to hold this 50 hourly and most importantly this 280 level, then I'm looking to the upside. And not only price is telling me that, but my momentum indicator is telling me that, and also the squeeze that is starting to fire to the upside is telling me that as well. So that's the first chart that I want to take a look with you guys, because this is actually a very, very strong chart that is pointing to the upside. If you want to short this just because you think that we are still in a bear market, and maybe we are, you can, but you don't have a technical pattern to short this market. The technical pattern that we have right here is actually a bullish pattern, right? You can call this a bear flag, a bull flag if you want to, right? You can call this the pole, and you can call this the flag, and maybe we're going to continue to break to the upside. But as long as we continue to hold this 280 level, or you can call this rising 21 exponential, we're probably going to continue to see more strength to the upside. So just keep that in mind. I continue to be very bullish for the rest of November and probably even going into December. But of course, we have to take it 1 week at a time. So for the Qs, I continue to look for more upside in this market, and we can take a look at some of the other indexes that we're watching. We can take a look at the SPY, and you can see very similar action, right? You can see right here that the SPY is holding above this crucial and pivotal level of 390. You can see that we had the gap above, right? Changing character. You can see that we have the flag. You can see that we have the retest of this 390 level, right? You can see right here, let me grab a different tool. You can see right here that we have the retest of that 390 level, that we held that level, and we continue to move to the upside. So my observation right here is that we are going to continue to hold this 390 level, and most likely we're going to close this gap that we had open all the way to 49.97. So the level that I'm going to give you for this week is going to be 390. As long as we continue to trade above 390, the probabilities that we will continue to see more upside in this market are actually pretty high. You can also give this a little bit of the benefit of the doubt if we continue to hold that rising 21 exponential moving average. So my expectation is that we're going to continue to see more upside. Also, if you watch volume, you can see that the point of control for this month is right here. And if we happen to continue to trade above it, then that means that there's going to be a lot of volume support for us to reach to the target of 410.97. So this one is also looking pretty bullish. That's going to be the SPY. This one is looking great for more upside. 390 is going to be the level to watch for. Then we can take a look at the IWM. And the IWM is really important, because you can see right here that we also have the changing character, right? We have that huge gap to the upside. We tested that 200. We actually trade above it, and now we pull back. But look where the IWM pulled back to. We pull back into a rising 21 exponential moving average. So I don't think there's any reason to short this, right? You can, a pretty simple trade this week, and we mentioned this on the channel, right? As long as we continue to hold this 21, a really easy trade was just to buy this pullback to the 21 exponential. You can set a stop right below that first standard deviation, and then you just see where this goes, right? Maybe we're gonna go all the way and fill this gap. That's an amazing trade, and you can keep your risk very, very tight by buying this pullback. And this is a really easy pullback. This is a pullback into a rising 21 exponential moving average. You can see that we have a squeeze that is active, momentum is above zero, and you can see that I have an active buy signal on my trend oscillator, and you can see that the momentum is above the midline. That's pretty bullish. So as long as we continue to hold this 21 exponential moving average, I'm gonna be looking for more upside in the IWM as well, and just keeping it pretty simple. And then we're gonna take a look at the SMH, and then finally I'm gonna talk a little bit about ARK. But first, let's take a look at SMH. SMH is also looking pretty bullish, right? We had the squeeze, we had the buy signal, we had a huge move to the upside. You can see that we're finding some support, some resistance at that declining 200 daily moving average. But what is really important to understand is that we tested and the pullback actually held at that rising 50 hourly moving average. So as long as we continue to hold this level right here, and we can call this level 210 if we want to, right? We can call this level 210. As long as we continue to hold 210 in the market of the SMH, of the semis, most likely we're going to see the semiconductors flag here, probably let this 21 exponential catch a little bit more with price, and then we're going to continue to see a move to the upside, probably to test this 245 level. So this one is also looking pretty bullish. I don't think that there's any reason to short this just because you think it's too high, right? We had a really strong move to the downside right here, but we were trading below all the key moving averages. That is not what is happening right now. Right now we're trading above all those key moving averages. So either you manage risk right below this 210 level and look for more upside, or you just don't short it or don't participate in this name at all. So SMH also is looking bullish, pretty bullish for the moves that I'm watching. And then finally, let's take a look at ARK before taking a look at the sentiment indicators. ARK is similar. Of course, ARK has a little bit of, is lagging a little bit because we continue to trade below declining 10-week moving average. And that 10-week moving average is this purple line right here. So we continue to trend below that. So ARK definitely has a little bit more risk to the buy side. However, what I want to point here is something really important. And this is something that we mentioned on the weekly watch list video, and you can take a look at that video on the link in the description and also in the link in this video. We were mentioning that ARK was finding a lot of resistance at that declining 200 hourly MA, which is the pink MA in my chart. You can see that we found resistance basically every single time that ARK tried to go up. It will find resistance at the moving average. Then we finally tried to go above it. We got a decline at that declining 10-week moving average. And what happened this time? This time we had a pretty strong move well above that declining 10-week moving average. We got a little bit extended, but what happened? We're pulling back, and you can see that we're pulling back to that 200 hourly moving average. So that's a change in character. And this is a place where you can manage a position and keep your risk really small. If you want to buy a position right here, you can probably keep a stop loss below these June lows right here, or you can buy a position here, keep your stop even a little bit more tight, and then look for more upside, right? If ARK happens to break down, then you're out. But if ARK happens to take a turn here and squeeze the shorts, we're probably gonna see a pretty strong move all the way to 44. So ARK is looking amazing in my opinion. It's not looking as clean as the other charts that we saw, like the QQQ on the SPY and the IWM. However, and the semis. However, what we're seeing in ARK is trying to change the character here. So that is actually looking bullish in my opinion and in my system. So those are going to be the indexes that I want to share with you guys. And then finally, let's take a look at some of the sentiment indicators that I watch. This is the put call ratio, and we have been talking for this put call ratio for a little bit right now. You can see that every time that we have these very strong readings, we happen to have a very strong move to the upside. We happen to see a lot of those readings in this base pattern that we had in the market. We actually did have some other moves well above 1, we can call them a little bit of extremes. I don't call them super extremes. However, you can see that we also have those kind of moves. My opinion here is that the market, if you just take a look at price action, the market is actually trying to bottom. I think this is a more meaningful bottom than anything that we have seen in the past, given the structure of the base that we're actually seeing right here. And if we happen to be wrong, then the Nasdaq Composite will just continue to trade to the downside. But I think that the risk reward right here is actually favoring the bulls. So if you happen to be a bull, I think that even keeping your stop below this low right here is going to provide a really nice risk reward if we happen to continue to trade into the upside. And then finally, this is a very important chart that I want to share with you. These right here are the interest rate, are the interest rates measured by Bank of America, and this is an amazing way to watch for these interest rates. And you can see right here that every time that we, and this is actually pretty important, every time that we see interest rates start to move lower, right, we tend to see really strong moves to the upside in the market. And when the interest rates start to move to the upside here, you can see that the market tends to trend to the downside. Now, what is really important here, you can see that I apply the same indicator, the same momentum indicator to this instrument. Is the same momentum indicator that I use in this instrument, the same one as I use also in the stocks that I'm watching. And what is really important right here is that we actually had a sell signal on these interest rates, given that we, and that means that I actually have a buy signal in the Nasdaq Composite. You can see that I got that sell signal trigger on November 10, meaning that I have a buy signal on the Nasdaq Composite on November 10 as well. And if we happen to continue to trade to the downside, then the probabilities that we will continue to trend to the upside in the Nasdaq Composite are actually pretty high. So I think that this is a very important chart to watch. You can just plug it in your trading view. Here is the ticker symbol. And if you happen to have the trend oscillator, you can also plug the trend oscillator into this chart. I have found a lot of edge just watching at this market and comparing it, making a comparison with the Nasdaq Composite. So I think that we just have to keep things pretty simple, guys. Once again, the most important chart, in my opinion, is going to be the QQQs. You can use the 280 level that we mentioned as a kind of as a very important level, or even that rising 21 exponential moving average. I think that covers everything that I want to share with you in this market update video. I don't want to make this video too long because I think that we have to keep things as simple as possible. Market continues to be bullish. As long as we keep that 280 level, I think that we will continue to see more upside in the market. So thank you so much, guys, for watching. Let me make sure that I don't have anything else to in my watch list to talk about. So everything was covered. So thank you so much, guys, again for watching the video. I hope that you found a lot of useful information so that you have very important levels in the indexes so that you can apply that to your trading analysis and trading business as well. Once again, thank you so much, guys, for watching. Remember to like and subscribe, and also follow me on my Twitter account. You can find that link on the description, and see you on the next one. Bye bye.